Уважаемые участники международного...
Well, dear participants in this International Financial Congress, we're happy to welcome you to our session for the modern risk management systems, where we're going to talk about risk management models. Maybe I should start off with introducing my colleagues. Jangir Jangirov, Senior Vice President of Sberbank, or now Sber. He is in charge of the risk management function. Maxim Kondratenko, member of the VTB Bank Management Board, also in charge of risk management, and Andres Alvarez, Director, EMA and AP Risk and Fraud Practice SAS. Let me also start briefly to discuss what we're going to talk about today. We're going to talk about risk management systems and the way they are affected by the trends that we observe and have observed in recent years globally: digitalization, globalization and deglobalization during the pandemic, and also the risk management model. And the very idea was pronounced back in 2000, and to a varying degree and rate of development, we have seen this model being introduced elsewhere. And risk management was about operational risks, credit risks, market risks. Now we are talking about a risk culture, a system of risk management. And as part of this idea and concept, we need also to talk about mathematical impact on risk management systems. We do see more and more complex mathematical models being used and complex mathematical formula being used. Of course, the very profile and role of a risk manager are changing. So we are going to talk about three main streams in risk management: artificial intelligence and machine learning in risk management, in building such risk management systems, research and education of professionals in risk management, and this is a big stream that we are going to focus on. And in the end, we will try to talk about the prospects for model risks and in the coming 3 to 5 years to provide a vision of that. And my first question as part of our session today that I would like to ask of our panelists is the question: what is the role of AI and ML in risk management systems of your banks? Perhaps I should ask first Jangir to address that, but maybe you can also put this up for poll so that our audience would be able to vote for any optional answers, so that they would be able to provide their votes and answers while they are listening to our panelists. Jangir, yes, indeed, it would be interesting to learn about the results of the poll. Artificial intelligence and machine learning are used quite directly in banks and in Sberbank, in Sber. We have around 1,300 models being used in the bank today, and about 70% of those models are not classical models, some regression type models, but we are using trees, neural networks, and XGBoost models. But if you take risk management per se, then there, the share of such models is only about 50%. Why it is less than on average for the bank? The thing is that risk management practice really have more variety, and also we need to comply with the regulatory requirements that prescribe some models. But still, those new models are more than 50% now of the total number of models being used. But why do we have so many models and so many complex models? There are two main reasons: speed and the quality of decision making. When we are talking about risk management, then when we really talk about decision-making, this is about credit risks, whether to approve a credit or not. But now risk management is a much broader concept. If you take the credit processes, then this is not only about decision-making about the amount of a loan or whether to issue or not that loan, but also it is also about monitoring the market, what signals are important and what not, and also what optimal actions we need to take to optimize the function. But there are also some other functions in addition and on top of the credit risk analysis. I'm talking about searching for scenarios and looking for anomalies, technological faults, and analysis of those. Also, to keep all of that in mind, we came up with a framework which we called as RegTech. These are two components: automatic decision-making and scaling up such decisions. We have an index of automatic decisions. This is proprietary, and we show here an example of what it includes. We are adding new decisions to that index, and we are trying, and that index is sometimes is downward, but then we want to really bring it up with our effort. So for our 3-year strategy, we picked up the solutions and decisions that are important, and we decided that this index should be above 90%. The second component, the scale-up effect, then if the number of decisions would grow like 10 times or 100 times, we need to really be able to handle all such volume of decisions. And this is not only about the classical banking business, but it is also about the whole of the ecosystem. And many of the decisions can be transplanted, like technological risk management decisions or operational risk management decisions. And this is where we are putting our stakes on. And we hope that we would be getting a lot of benefit from that. Now, why we're doing this and the way we're reaching that, one of the important components of this whole effort, let me have my next slide. This is a toolkit, and one of the important tools there would be the Sber data science, where we kind of like pull together a team of 50 people, 50 professionals who have been developing such a tool for 3 years now. The idea is quite ambitious, so that from a concept to the implementation to be within 1 day. I mean, you can do that, of course, but this is still a strategic vision for us. And we do use some databases and libraries for such a process, and we can model and find the most optimal model automatically, and actually that can be also incorporated into the decision-making process. This is one of the investment. It is not really a very separate tool, but it's kind of like a whole area of our investment. And of course, to us, the most important thing is the speed of decision-making. That's the goal, and that's the toolkit that we are developing, and I understand that other banks are going to do the same. Thank you very much. And by the way, you bring me to my next question. When you mentioned a team of 50 people that has been developing such a big data processing idea for 3 years now. Well, I mean, there's a saying that generals are always prepared to win in a war which is already in the past. But it's like we are training some college students to be professionals in an area which is already a thing of the past. And my question is to Maxim now. There is a very distinct difference between the way students are trained in colleges and the way they operate in real life. You do have very good risk managers with enough experience, and But how do you combine all those various talents and skills, young and mature ones, so that you can come up with a team to meet any risk management challenges? Quickly, it's about motivation. I was recently asked what turns skills and knowledge into human capital. And I was expected to provide a very brief answer, and I also mentioned motivation. And I think motivation really makes miracles and turns a set of skills and knowledge into an asset that can really provide some good result. Data-centric effort, algos and computational capacity, various models, all of that in the last 10 years, well, I mean, you would think it is quite recent, but no, we have been living in this digital world or in that same digital environment for at least 10 years and living at very high speeds. Now, all of that brings you to rethink the way you operate, and with the same nature of risks, you now can take a different view of those and handle them efficiently. My conviction is that this marriage of models and technologies would be a key to, on the one hand, of handling some well-known risks, and in this world that is getting more and more complex. But on the other hand, it is also about the speed of decision-making, which requires you to develop new products and make analysis faster and faster. And indeed, the development of new solutions is a good motivation for you to work harder and faster. And the way we can achieve that, well, if you take VTB, my bank, a few years back, we launched an educational and career program, which is a risk management school, that's what we called it. And the year of the pandemic made it possible for us to efficiently put all such training online. And within a very short period of time, using the core competencies like CFM and others, we, using also the standards that are required in our banks to do the various development, software developments, like, of course, you need to know something about Python and other languages. And now we started off such a program with new participants. Usually these are the graduates, or rather the last year students in those colleges who would really take some training. And it's a big funnel, really, because we would enroll like maybe 300 students initially, but at the output end we would have only like 10 to 15 trained professionals. And this is done for our use, and we have talked about that a lot to establish a culture. This is a risk management culture, but you need to also avoid any cognitive traps, and also it is about technological risks. The risk 2.0 would be the risk of technologies, and you need to avoid those traps and really provide a comprehensive answer. And the second area where we are very proactive would be development. Again, here you need to somehow match a risk manager and an IT professional. And it does not really take much to match them, because you need to have an agile approach to project management to ensure quite sustainable release rate and the prioritization of resources. And as part of streams and teams, you also use certain priorities and you start working there. It's more or less like a new production approach that we call it. It combines both agility and project management. The risk manager then would be also the customer and also would be setting the terms of reference. And in the end of the day, the risk manager would also be responsible for the outcome of the combined effort, and that is for the product that we would be able to offer to the client. So this is where we are very active, I would say. Well, Andreas, I'm not going to ask you questions about how you pick up professionals and train them. I understand that you are training them yourself. And what about the trends and projections of risk management and overall trends in risk management globally, in your opinion?
Well, first of all, thanks for having me. Global trends, adjusting to the speed of the individual markets. That's absolutely key. We're coming from legacy markets originally like 10, 20 years ago that were fairly slow, where you had a minimum of data being available. Financial institutions are used to work with large amounts of data, specifically in financial markets. You see sub-second changes to exchange rate and asset prices and so on. So you have to work with a lot of data. Nowadays, social media, if you take that into your models, that's sub-millisecond. There are large volumes of data coming in. So you need to be able to process them, to validate them, to source them. So managing data is key and will remain to be the key going forward as far as we can see. Managing data means that you define responsibilities for the data to be used. You define processes, you define sources of data to be used, you define algorithms to fill any gaps that you have in your data. That's absolutely mandatory, especially at enterprise level, that you agree on common standards, on common approaches, so that you're using the same technology, the same analytical approaches, also for filling gaps in your timelines, in development, in validation, in production, because otherwise you just are running the risk to have different results coming from them. So the speed is one. The speed also needs to be represented in terms of the technology, obviously, the underlying technology, and cloud is giving you several chances to speed that up. So you can use several resources spread across different operating centers and so on, spinning up individual environments, and specifically also when it comes to being able to reproduce calculations performed in the past. Cloud technology is giving you a major advantage because you can simply spin up another instance of your environment, reproduce the environment that you had before, and reproduce exactly the same figures. Now, education is a major part playing into that, and was already mentioned in here. If you look at platforms like Eureka, and if you look at the curriculum for a data scientist, it's almost representing an IT genius. So people not only need to be familiar with mathematical and statistical approaches, but they also need to learn how to use different programming languages. They need to learn how to work with different data sources, databases, using big data environments, cloud technology, and so on. So it's almost like an, again, IT genius that you're asking for when you're educating people. And then you obviously need to bring the business concept in, the business background, the domain experience and expertise. It's absolutely mandatory that you first of all ask yourself, okay, why is it that I'm going for AI ML models? Wouldn't classical models, traditional models be sufficient for me? And it's normally the amount of data, the number of variables that we take into account when deciding to go for an AI ML approach. But the data scientist clearly needs the support from a domain expert in order to understand, first of all, the domain, in order to also understand regulatory requirements, in order to understand ethical standards, ethical regulations that are out there, specifically for organizations that are acting internationally or if not globally. There are so many different standards, regulations, laws that you're exposed to that you need to comply with. And you all need to take that into account. Coming back to the speed argument, it's absolutely mandatory that all of the participants, so coming from the domain experts, the end users, the IT departments, the model developers, validators, and so on, work on a common platform. There's no way around it if you want to be in the game, if you want to be fast enough in order to develop new models, in order to bring new updated models into production and so on. And just learning from the past, for example, in 2018, Databricks performed a survey and found out that only 1/3 of all AI ML model projects went into production, and that was only after more than 6 months. That is not acceptable today anymore, and will for sure not be acceptable going forward either. So it's key to bring all the elements together to establish the framework. So governance is a main part of the overall approach, but then also matching technology with skill sets inside the organization.
Спасибо огромное, Андрес. Вот вы сейчас...
Thank you, Andreas. You mentioned two key points, I think, that I would like to dwell upon. And maybe my next question would be also to you. You mentioned about the speed. You mentioned that speed is very important. And you also mentioned that not all the startup projects were successful and really brought a positive result and an outcome for them. Well, the artificial intelligence means about seamless integration of AI and ML in business processes of companies. As an expert in this area and as a representative of a group which offers certain solutions and analyzes those solutions, where you participate together with other financial institutions. In your view, again, what would you recommend? What do you think is the most important element and aspect of coming to the concept of model risks, and how really to monitor the performance of such models? Given the fact that, as I believe, that when you're talking about some machine learning and artificial intelligence approaches, to some extent, those models are closed, so to say. So how do you monitor their performance?
Well, let me start with the model risk management requirements as such. It's absolutely mandatory nowadays to define a clear framework which sets the standards, so the development standards, the data usage standards, the purpose for any model being developed. And that should all be well documented, and people need to understand everything. So it's not sufficient that you have any kind of SharePoint there where you document what the exact requirements are when it comes to model development, validation, and productionizing models. But people also need to understand it, buy into it, and hence, well, almost sign off on these policies that you define. Now, with regards to the technology, that's what should be a facilitator, an integrator, effectively. And that is why we are constantly recommending customers to go with a single platform that can incorporate multiple different approaches. Open source is always a very strong discussion that we have, a very important discussion that we have with our customers, because many people tend to use open source nowadays. Now, open source has different advantages, but also several disadvantages, specifically when it comes to the number of open source tools out there, how to combine them, how to configure them to work together, and especially afterwards also bringing all the results into production. And that is a traditional shortfall that we've seen. There was just recently a discussion on LinkedIn whether open source is really that cheap or whether it's fairly expensive. And some of the comments refer to, well, you need to understand the open source universe and ecosystem in order to pick the right tools and combine them. But more importantly, people normally fall short of bringing the models developed using open source tools into production. Because A, you need to use exactly the same environment. So you should be able to explain what will be the performance of my model that I'm using. How will it be sourced with the data? Is that seamless integration with your data pool? How will it be used in production in terms of what's the frequency being used? And afterwards, also, how do you track the performance? So when you're developing the models, you should always have in mind that, hey, specifically with AI ML, there could be a lot of bias in there. You could have drifts in the model and so on. And you need to almost track those in real time. There are different performance statistics that you can apply depending on what kind of model you're working on and what kind of target usage area you're addressing. But those should be calculated, ideally in real time, but at least on a daily basis, I would say, specifically with the AI ML models. And then you need to make this information also transparent throughout the entire organization. So it's not sufficient that you calculate these performance statistics. They sit there. People might have a look at them, but they do not trigger any kind of follow-up activities if you see a certain trend. If the models are deviating in terms of the results performed from your targets, they should trigger follow-up actions. And it should be absolutely transparent to everybody in the organization how they perform, which models do require recalibration, which models need to be updated as such. And that's even up to the board level. The ultimate responsibility for any activities that refer to the organization is with the board. And the risk management is with the CEO of every organization. That person and the entire group of people needs to understand what's going on in the organization. They need to understand how the decisions derived from AI and ML models could vary depending on the input data, because that's required not only by regulators, but also by the key stakeholders. And this information needs to be available at any point in time. And referring back again to one survey, SAS and GARD performed a survey last year, and out of the response, 48% responded that they do not even know where AI ML models are used throughout the organization. That's simply unacceptable. And that is something that needs to be addressed going forward.
Спасибо огромное. Давайте, поскольку у нас вопрос был...
Thank you so much. Well, now let's bring up the results of our poll, because our poll was very much related to that.
Значит, в каких целях ваш банк использует искусственный интеллект и машинное обучение?
How does your bank use AI and machine learning? 57% said to study customer preferences, come up with new products, and only 14% said they use it for risk management, and 28% don't use AI. Well, we as a regulator believe actually this figure is more, so more banks don't use AI. Although risk-based models are mandated to be used by the banks according to a number of our regulations. Well, quite an interesting conclusion that I could make from this poll. First and foremost, AI and machine learning are used to improve interaction with customers and to study customer experience. Well, that's quite a surprising outcome for me. But that was the answers of the audience. What about the second poll? Minimizing model risk. Thank you. We now have this poll on the screen, and now I'd like to ask Jahangir. And the question is basically the same as asked and put to Andres. How can we minimize the model risk? And how prepared is Sber technology-wise to counter model risks? Andres mentioned that quickly that there used to be some unsuccessful precedents. Model risks division here at Sberbank was set up more than 10 years ago. Its ultimate goal was to validate model risks for the models that we design for risk management in general. So when the model function went beyond risk management,
at the bank, we decided that all of the bank's model will be run by this division. So currently we have 1,300 models at Sber and even more at Sberbank Group, and so there are about 300 models, and the rest are compliance, business line models, and they all undergo validation. And we rely on that very heavily. So if we have quality models, then we have quality products. If we see that this model gets degraded, is undermined, is compromised, doesn't show good performance, then we either don't implement this model at all, or we roll it back, scale it back, and put it out of operation. Validation of a model is a complex procedure. So you first look at the math behind the quality of the source data, execution. Definitely all want to create it once and forget about it. But we also try to introduce regular updates or monitor it on a regular basis. So this is why we've introduced a new procedure, auto monitoring. We do it on a regular basis. It could be, the frequency could be between 1 day and 1 month. That's the frequency that we rely on to validate the quality of the models, of our industrial scale models. So the toolkit that we have is now integrated into the industrial systems where the model operates. And then we just, have a peek look at the quality of this model. We get the snapshots, and we might identify some cases when it gets degraded. It's because there are changes in consumer behavior, in macroeconomic parameters, or some source data could no longer be used, and we will definitely spot that. By implementing this approach, we rolled it out across all of our key models, and about 70% of our models are now in auto monitoring mode. I fully agree with what Andres said. This data needs to be transparent. We don't do it for our own sake. We transmit it to, we communicate it to the board and to the board of directors, and we do it upon our own initiative. It's not a mandatory thing. The top management and the BOD need to be aware of the quality of our models, the models themselves, what is the share of the models that is in the red zone. We disclose this in full, and we really appreciated it when the COVID broke out last year in March and April. Two major parameters changed: macroeconomic expectations around the world and domestically. And it means that the prerequisites of many models are now under question. And second, the behavior of corporates and individuals changed due to well-known reasons: lockdown, decline in incomes, furloughs, and we conducted an extraordinary validation of 400 models over 2 weeks. Lightning speed. We took decisions to recalibrate them, and we decided we will put all of the models, except for the minor ones. The bulk, the lion's share of the models would be run in auto monitoring mode, so that was a justified approach, and we keep using it across the board. Thank you. We're now getting questions from the audience, but before I give the voice to our audience, maybe I'll try to reply to some of them myself. I'd like to ask a question with a provocative twist. Mr. Jangirov said that Sber is a group. He didn't use the word bank. What about VTB? VTB positions itself as a bank, but it's also a group, and it also promotes its own ecosystems. So it's part of the debate that we currently have. Will AI and ML help you to comply with regulators' requirements? Well, what can I answer to a regulator? Definitely, 100%. Can I give any other answer to a regulator? No. Well, I think we need to talk about the marriage of regulation and risk management. Regulation and supervision, yes, supervision, becomes a permanent, ongoing process. You don't do it once a year, but for systemically important banks, you're under ongoing supervision, and the intensity of iterations is very high. So, as I said, intensity is up, volumes are up, there's more data involved. This is why we cannot just keep our conventional ways of interaction. We need to go beyond that. Here's an example of how risk management can work with the first echelon of defense with the business lines. And some of these tools, I believe, could be rolled out by the regulator as they deal with the banks, with the group. This is thanks to the drastic improvements in the quality of the data demonstrated by the top banks. There are several reasons. One of them, well, in case of Sber and in case of VTB, is the so-called PVR. So you have to undergo a lot of use tests with high-quality data. So that definitely gives you some advantages. So we would work with the regulator in the same vein as we work with our customers. We have done a lot of automation. We use complex algorithms to identify any outliers, any anomalies during monitoring. We monitor a lot of routine operations. We use huge arrays of data. We rely on news channels, any source of any data that you cannot put together manually and analyze it. And that gives you a huge leverage. In identifying credit risks and model risks and whatnot. And the second area in ML is we use algorithms which are not ML proper, but are still applicable. And here's the use case. You might need to decompose some of the portfolio solutions to break it down by the transaction. So you can take a sample, find some patterns, and then upscale it across all the data, then cluster it and find some anomalies. When we switch to SMA in operational risks, we had to reconcile our data with accounting wires.
такого рода механизмов, такого рода алгоритмов, оно
And this is why
Так вот,
ML is indispensable here.
кажется, что через какое-то время мы придем, наверное, к тому, что
So over time we'll reach a stage when monitoring reserves, monitoring reports, processing forms and questionnaires will be done by algorithms, by ML.
общаться уже на экспертном уровне по аномалиям.
Then we will try to do diagnostics, to identify anomalies, outliers. That's the essence of monitoring in a way.
Дальше уже, если, так сказать, воспарить,
And if you take it a step further, if you take a bird's eye view in the medium term, this
портфельных
use case of decomposing portfolio solutions
может быть вполне
to a single transaction could be
Потому что в конечном итоге вот мы
rolled out across the board.
данные скорости,
As we said, data and speed, these are the two ingredients of success.
будут являться минимизация технологических
You also need to minimize technology and model-based risks.
минимизация технологических рисков дает, ну, опять же, в парадигме риск-доходность, да?
In the first case,
Она дает, по сути, уверенность
it gives you confidence that you're secure from cyber risks, and if you minimize model risks, then you ensure the resilience of the logic behind the decision-making process. Thank you. Indeed, we as regulator keep track of what's happening. We would like to have a better, more intensive dialogue. On our side, we focus on these areas too. We've got some questions from the audience. I'll read them out. Will there be a pool of data that will be used to assess risk profiles, some general pool of data? I'll reply to it straight away. Some ideas like this have been floated, but there are some restrictions in Russian law, particularly in banking law, but there are debates like this that take place from time to time. Could regional banks have access to such internal risk-based models, maybe for a fee? Well, I will ask a question to all the panelists later on that might include this particular question, access to these models for a fee. There are actually tough restrictions. Well, if you disagree with me, I'd be happy to give the floor to you. How do banks manage risks using AI, ML, etc., particularly in running the risk management process? Well, I think this question has been answered by our colleagues, and Andreas mentioned that, Jangir talked about that, and Maxim mentioned that too. Are there any assessments of how AI-based risk management can improve efficiency of risk management in general? Are you ready to comment on this? As you assess the performance of a model or a cascade of models, you can do it in several ways. Well, the conventional ways, you run a pilot on a sample, and then you benchmark the decisions taken based on the previous model and on this model. Then you study different metrics, you look at errors of level 1 and level 2 errors, and then you figure out how many wrong decisions was taken compared with the previous one, and vice versa. So each decision has its own cost of an error. If you don't issue a loan, your your cost of an error would not to get the NPV, some extra cash flow, and if you advance a loan to a customer that does not give it back, it's a default and all the other consequences. So actually you do have assessments. They are just different in every case. So sometimes you can use these models unsuccessfully, and we've had case studies like this. They took place a long time ago. Okay. Could you please give a brief answer to the following question? Could automatic systems using AI and ML fully replace people in risk management divisions? Jangir and Maxim, 30 seconds. Fully replace? No, I don't fancy that. But to a great extent, yes. Maxim? Routine manual operations, definitely they could be handed over to AI. If there's an area with high level of cognitive mistakes, you always need to keep some experts who would add, train models, and someone needs to design these models. Come on. You still need human talent, so the human factor will still have an impact. Andres is smiling, and we'll definitely need people out there. That's the positive key takeaway from this question. We have less than 4 minutes. And I want to ask a general question. If you invest in AI, ML, would you be able to get extra value for the business? Well, okay, we got the answer. What about the second part of the question? What can you recommend to our market participants? What's your advice to the audience of this conference?
От каждого участника буквально по 1 минуту.
1 minute, no more. And maybe you can reply to some of the previous questions. Okay, if you don't mind, 30 seconds, Maxim.
Будет текст слов такой.
No, it's just going to be a list of words. Full cycle. Working with models. And you need some kind of infrastructure to run those models. Second, that's what we're working on at V2B, data fusion. Not just that, fusion of algorithms and fusion of processes. Don't have time to give you any use cases, but we do have a lot of use cases, quite exciting ones. There's a lot which can upscale. Andres, 30 seconds.
Well, AI/ML is definitely the future. It helps you understanding the large amounts of data that you have available nowadays. But I'm a strong believer in people. So you need to train your people, you need to educate your people, you need to allow them to follow the speed at which technology and also the amount of data is changing. So AI/ML can certainly help you understanding your business processes better, performing or achieving better business results by automating processes and gaining more insights into your data. But I completely agree with the others that human beings are key. They need to have the oversight, they need to have the ultimate decision on outcomes.
Спасибо огромное, Джангир.
Thank you, Thank you. Jangir, can you add something? Well, Maxim and Andreas gave you a lot of different ideas. I'd like to follow up on what Andreas said. Definitely we need to invest in people, not just in data scientists and model specialists. It could be an illusion. Someone might think that I will invite the best data scientists and magic would work. No, it doesn't really happen like this. We need to have both product owners and top managers who need to be aware of that. And Andreas said people at the top need to be aware of that. We need to invest into this competence across the board, not just in risks and data scientists, but at every level. Thank you. We just have 1 minute left. I'd like to ask to bring the results of the poll on the screen.
Внедрены для разработки методик и процедур модельного риска 33%.
33%.
Начинаем задумываться 44%.
Just starting to think about it, 44%. It's not relevant, 22%.
Ну, такое достаточно.
Well. Quite an even distribution.
Уже над этим вопросом работает.
So some of you are working on it. The majority, or half, are just scratching their heads and starting to think about it, and some even think it's not really relevant. Well, I hope this discussion will provide food for thought, so that the managers would focus more on how they work with model risks. And bottom line,
Хорошего дня.
have a good day,
Ну и добро пожаловать в будущее.
and welcome to the future. Thank you.
Всем привет! Это сессия.
Hello to everyone. This is the session about the impact of information security risks on the financial institutions' resilience. My name is Nadezhda Grosheva. I will be moderating the session, and today we're going to discuss very relevant and important questions. I think you have all noticed that during the pandemic, the use of online banking and mobile banking has grown in popularity. There are some numbers. For example, online banking, the use of online banking grew by 23%, and mobile banking grew in popularity by 30+%, as BCG reported. In Russia, we have a growing number of people using applications, and more than 56% of people are using banking services through their mobile applications. And the more people are using their banking applications, the more important would be the operational resilience and security of such services, and the possibility of getting such services without delays or faults. We are going also to discuss how this can be regulated and how banks can support their operational reliability, and how clients can test the reliability of their banks, and what is the international experience, and how can we ensure the cyber risks. Let me introduce our panelists. Herman Zubarev, Deputy Governor of the Bank of Russia. Hello, Herman. Hello. David White, Head of Cyber Resilience Coordination Center of BIS.
Hello, David. Vadim
Kulik, Deputy President and Chairman of the Management Board of VTB Bank. Hello, Vadim. And Irina Alpatova, Deputy CEO and Corporate Insurance Director of Alpha Strachovania. But before we come to the first batch of questions, to all those who are watching us, please remember that we have a poll in progress, so please do vote so that we can make some conclusions about your approaches and your attitudes to cyber risks. The question is cybersecurity important for the resilience of a financial institution? First, it is less significant than other risks, like liquidity risks or credit risks. The second optional answer, it is less significant, but is on the way to become the same level of importance to the financial institution. Fourth, it is more important than other risks, and fourth, it is one of the key characteristics. Now, to assess the resilience of banks in terms of providing remote banking services and prevent any technological faults and disruptions and cyber attacks. My first question is to David. BIS is setting the standards for the financial sector. What is the international experience with setting the requirements for the operational resilience and reliability of banks?
Thank you very much, and thank you for the question. Actually, I think I have slide to show, if that's okay.
Yeah.
So while that is coming up on the screen, first of all, thank you very much for the opportunity to be with you today, at least virtually. And I thought what I would do is just give you a very brief overview of the Bank for International Settlements. We are the world's oldest international bank, but we are actually owned by 63 central banks. We're often called the central bank of central banks. The Bank of Russia is one of our shareholders. Central Bank of Russia, rather, is one of our shareholders as well. And we do have a fairly global footprint, in addition to maintaining a great relationship, obviously, with the 63 central banks across the world. We have a number of innovation hubs that are looking at fintech, and 2 regional offices, one in Hong Kong and Mexico, that execute trades for us. But very briefly, the Bank for International Settlements is unique in that it actually hosts a number of committees. These are international committees, each with their own mandate, that deal with a number of different standard-setting policies and guidelines looking at global financial stability. And what I thought I would do is just very briefly walk you through kind of 2 categories of these committees. The first, if you'll see on the first slide, these really deal with those committees and organizations that are setting principles and standards for the global financial sector. The first is the Committee on Payments and Market Infrastructure. This committee has well over 120 members globally, and they are concerned specifically with making sure that the payment system internationally is sound. And increasingly, what we are finding in all of these committees, I might add, is that back to the first question in the poll, cyber resilience is definitely now at least among the top 5, if not top 3 on any risk register. And obviously, when we talk about the efficiency of the payment system, the security and the resilience of that system is, of course, of great importance as well. The Basel Committee on Banking Supervision, again, sets principles and guidelines and standards internationally. And here, I would say a number of central banks would then take this guidance, and they offer a number of things. You might have heard of the Basel Committee Directives 1, 2, and 3. But they're also now giving guidance now on best practices for cyber resilience as well. And this is key because they really try to get the exchange between the central banks, the regulators, and the supervisory authorities as well, setting minimum standards and guidelines. And I stress now that this is also into cybersecurity. If you think about the International Association of Insurance Supervisors, this is another area as well where they're, again, setting the standards for those that are supervising the way that insurance is, of course, practiced globally. Next slide, please. And now we move to the second category, which really these committees try to influence rather than doing standard setting per se. One is the Financial Stability Board, which again tries to bring together decision makers in the central banks and in the political arena. They try to help national authorities implement effective regulatory and supervisory measures. And I will stress, if you take a look at the websites, there is guidance without exception on all of these different committees on cyber resilience. And finally, we talk about the Financial Stability Institute, where they have a number of offerings trying to help supervisors deal with this matter. And last but not least, the area that I run at the Bank for International Settlements, the Cyber Resilience Coordination Center, we are really devoted to best practices among the central bank community to do things like knowledge sharing, collaboration, and operational readiness. And this all is underpinned by operational resilience. So this gives you a broad overview, very, very briefly, of a number of very great committees that are doing either standard setting or promoting best practices in this space for global financial stability. Thank you.
Спасибо, Дэвид. Вадим, скажите...
Thank you, David. Vadim,
банков важна операционная надежность или это очередной пресс со стороны?
Do banks actually perceive this as very important to be resilient, or is it another requirement from the regulator, or is it another pressure from the regulator? I don't think that we should be talking about any pressure from the regulator. The story is quite simple. The risks that can materialize may cause a suspension of operations of a bank because we might have some disruption in our services that we provide to the clients. And this is totally inadmissible. So this is not a story which is led by the regulator, but it is rather the bank itself that needs to support its clients 24/7. And this is our commitment to the clients. We, in no case, can afford any interruption in our services. So we are ourselves interested in trying to oppose such threats. Thank you, Vadim. Indeed, banks are providing their services also remotely, or you can visit an office or branch of the bank. But Irina, the operational resilience and insurance, is there anything common between those two? Well, insurance, there is still a stereotype that insurance companies is about an agent who would bring a paper policy to the client. But this has not been long a practice. If you take a look at the insurance market, then in Q1 of 2021, compared to the same period of last year, the market grew by exactly 50%, 50%. Now, if you take the third-party liability for motorists, about one-third of those policies are sold online. If you take my company, Alpha Strachowani, about 40% is sold online, but we also provide 100% of the travelers' insurance policies online. So Alpha Strachowani, of course, is very much interested and is influenced by operational resilience matters, and that is why such a story is no less important than to remote banking services. We, as another participant of the financial market, are guided by the resolution 684 on the operational security and resilience, with two caveats, because we are, for example, providing medical insurance. But just remember, we're talking not only about some money implications, or we are talking about some serious harm to the health of our clients if a person is trying to get a service and the application is not functioning, and then we might be running the risk of a health hazard to such a client. And also, we are not only prone to such risks as a participant, but we are also assuming such a risk when we are talking about the insurance against the cyber risks, an insurance that we are providing to the other participants in the financial market against such cyber risks. We're going to talk more about cyber risks and insurance. But Herman, where do you find the role for the Bank of Russia there? Well, it's hard to, overestimate the role of the Bank of Russia as the regulator there. On December 30 of last year, we have had changes to the federal law on the Central Bank of Russia, and we now can introduce requirements for operational resilience. And of course, we are in the process of coming up with the proper regulations and rules, and there we are taking a two-way approach. On the one hand, we are using international practices that David mentioned, the recommendations and guidelines that are offered by the sectoral regulators, including from the Basel Committee for Standards and Payments and BIS in general, but also if you take the International Commission for Securities and the International Organization for Insurance Supervision, etc. So we are watching all those guidelines and are thinking how to integrate them with the Russian law. But we are also guided by the local standards and I'm talking about the FAPSI, which is the Federal Telecommunications Service, and the Federal Security Committee. We are now developing like a national level standard for such. This is the security of financial transactions, operational resilience, and the fundamentals and the fundamental measures that need to be taken. What is good about that name is that basically, you know, looking at that name, you understand what it is about. This is basically a package of various software and hardware measures that you need to have in place to ensure operational resilience. We hope that such a standard will be approved soon, and we will be implementing such a standard and a requirement. Operational resilience is at the kind of like border between reliability and your efficiency. And here we want to also establish some requirements to the processes that might affect operational resilience, and the processes would be represented quantitatively. We will be monitoring them based on the reports that we are going to collect regularly, and their actual performance would be assessed by the number of accidents or incidents in a particular institution. And of course, of late, we have been paying a lot of attention to our proper analytical centers and data processing centers, so that we can have information about the cyber threats and risks, handle such information, process such information, and advise our supervised entities of those. And of course, we will be talking more about more resilience. We are going to have also the something that we are calling like cyber training programs, so that together with the institutions we can develop a mechanism to counter such cyber attacks. We have several scenarios now being developed based on some real stories, based on some analysis of the real attacks, and we think that when we operate from such training programs to some real mechanisms, that we would be able to identify weaknesses in the cybersecurity systems of our banks, and as part of our consultative supervision and risk-based supervision, we will be providing such consulting. 22 major financial institutions last year actually went through the testing of their cybersecurity systems, and they received some feedback from us. We actually saw that it was perceived quite positively, such training, but we will continue to do such training in future. Since you are talking about some real stories, maybe my question is to Vadim. VTB is one of the largest Russian banks with a huge client base. Is it difficult to support operational resilience, and what kind of challenges do you face there? Now, regarding those real events, real cyber events, indeed there are many of those, and let me probably call a few chilling numbers, I would say, and then we'll try to calm you down there. Now, what is the trend that we observe today? In the 5 months of 2021, we experienced, how many do you think attacks we experienced or had? The number is 1.2 million such cyber attacks. Yes, I mean, of different type, of course. And I'll discuss those. Most of them, about 60% of those, are various, cyber probing, sort of, into our systems, trying to find some weaknesses in our network, and maybe to establish our configuration of software and hardware systems, and to try to find some open elements and vulnerabilities in our network. So it is about 60% of those attacks. 22% of those accidents and incidents were the attempts to use some well-known vulnerabilities of computer systems generally. So throughout 2020, we only had 750,000 such attacks. And now, compared to 1.2 million in the first 5 months of this year, you can see the growth of such of the number of such attempts. Quite a fantastic growth, I would say. So the thing is that the density of such attacks is becoming very high. And this is one of the big challenges. So you see more and more such attacks. Yes, indeed. They're growing exponentially, if you see. This is the first challenge. The second challenge is that we are undergoing quite a large-scale project of digital transformation, and the density of deployments of new solutions is very high. We are kind of like running 178 updates a day. That's the volume of changes that we have to support and accommodate. Now, anything regarding cybersecurity and cyber protection, now these two trends, the two growing flows, if you like, of cyber attacks and updates, actually set the scene for our management practices. And in both areas, we do have solutions. First, in terms of what we are building, in terms of our construct of the network, this is a tiered defensive system, if you like, which includes 3 echelons or 3 tiers of protection. And we also have some specific methods that we use when all the updates are developed and designed already from day one with the cybersecurity in mind. So those updates are designed in a way so that they are secure. And IT professionals are part of the development teams. And we are releasing a product which already has all the necessary requirements in terms of cybersecurity. So those products do meet our requirements for cybersecurity, but also if you take the updates of the software code, it also provides for some phases of testing. So there are some elements there that actually support the testing of those products before such a product is rolled out. Now, regarding this tiered protection system, of course, we do have means of against DDoS attacks and firewalls and sandboxes, of course, to see what is coming in the files that are sent by our partners, or in the name of our partners with whom we openly integrate. And also we have a second echelon or tier of protection where we process various events when we identify some abnormal traffic or abnormal elements, and this is a multi-vector protection system. And also there is also some kind of like another additional layer of protection which covers the full landscape of our operations, where we use the various tools to identify anomalies. There are also tools that use neural networks to predict new infrastructural and network elements in the landscape, or how the potential vector of attacks may change if a new element is added, so that we can be prepared to such an attack. And on top of all of this, you have also the operational monitoring center, which oversees how such automated mechanisms are performing. And this Ops Center can interfere in case of the need of some manual handling. So this way we can more or less repel all those attacks. None of the 1.2 million attacks were successful. So they may reach only maybe level 2, where where even the most successful attacks are kind of like rejected and repelled. Do you have very frequent complaints from your clients? I mean, what is the principal difference, because when a client goes to the office or the offline branch, it is quite easy for the bank to provide such a service in the offline regime. But when you are talking about online, there are many associated risks, because maybe a client cannot connect to the application, to the online banking. Do you receive many of those complaints? Well, the complaints may be many. Why say the application is not responding? It may be related to your poor internet connection. But we are talking about the proper risks. That's part of the complaints. We have not had a single incident when that event caused a disruption in our access or service. So we have not had any complaints about such events. Thank you. Vadim?
Now we've come to the next area of insurance of cyber threats. I would like to call on the audience to ask questions. And please, I call on you to vote in the poll. Disruptions at financial institutions could lead to losses for the customers and for the financial institutions. How can we ensure these risks? If you don't make a payment on time, if a deal is not closed on time, it might be a waste of time and waste of money for customers. Irina, what is subject to insurance? How can you insure cyber threats? Thank you. Insurance initially was supposed to help people avoid fires or to save them from losses incurred by fires and robbers. But today, life is different and threats are different. So previously, a criminal would wait for his or her victim somewhere near their house, and right now they are waiting out there hunting in the social media to get access to the bank card. And previously, people were taken for a ransom, and right now you don't need to take people for ransom. You can just stage a cyber attack and demand ransom. And it could be a virus in thousands of computers, or it could be a targeted attack on a factory led by the competitor. So it's DDoS attacks, phishing, various disruptions, malware, ransomware, and so there is a plethora of risks out there. Now, what could be compensated? These are third-party losses, customer, partner, vendor losses, for any corporate, not just for the financial entity. These are data recovery costs. They can also be insured. The funds that were stolen from third parties or from the bank or from any other legal entity. Also, we can insure against lost revenue. So, operation resilience was disrupted, your website was down, the company did not have a chance to sell their products, and this is why they lost some potential revenue. And finally, investigation costs into cyber attacks. So these are the areas which you can buy insurance for. And the very last item, that's personal data leaks. It's not really relevant for Russia, but in the West, that could lead to huge penalties because regulation is completely different. So that's a different story in the West. But overall, that's the breakdown of the risks that we can provide insurance for. So what is the probability? There are three buckets. First, three pillars. So we first get statistics. We get it from a lot of sources, primarily in the West, and from Russia too. According to the Interior Ministry in 2020, cyber crimes led to a total loss of, some chilling numbers, like Vadim said, 450 billion rubles. 1 year, 450 billion rubles, just in Russia. That's a staggering amount. So we get the stats from every possible source. Second, we look at IT security framework at the clients, on the client side. And third is accumulation of risks. Insurance companies have learned to do it for earthquakes, fires, but with cyber threats, we're still learning. One virus can hit an unpredictable number of computers around the world. How do you calculate the risks, the probability, whether it's an insured event or not? No, I mean, how can you calculate the potential impact? So first, the stats, the data for client-specific data in terms of their IT security, and accumulation, as we call it. Thank you, Irina. Vadim, in what case would the bank be interested to get insurance against these cyber threats or threats against its operational resilience?
Тут вы понимаете, как сказать, очень сложно заподозрить наших коллег-страховщиков в том, что
Here's the thing.
благотворительности, да?
Definitely, our partners from insurance companies would not develop this, would not grow this market out of charity reasons. They want to earn money on it. So currently, there is a deficit in statistics, but the structure and the level of threats is changing very fast. So I gave you some figures. 1,200,000 attempts, so none of them successful. So you have a lot of statistics. The statistics are quite high, but losses have been minimum. There is not enough statistics because there have been no successful attempts. So what's the price of such insurance? It's really hard to assess this price. And for every year, for the first year, you'll definitely miss it. We may purchase this insurance, purchase this plan, but nothing's going to happen. Or so we lose out, so we overpay, and the same could happen on the side of insurance. The total market is $8 billion. That's the total market for the world in terms of cyber threat insurance. So, this market still has a long way to go. It needs some time to get mature, and we need to figure out how our insurance partners would do the assessment before providing their services, and the price is the cornerstone issue. Second, as you said, you can insure us against lost revenue. Well, you can only find free cheese in a mousetrap, as the saying goes. There is still so much non-regulated in terms of what is an insured event. Yes, the list of cyber threats is long, but
большая часть из них
Most of them are hard to confirm, to corroborate, are hard to prove. So there's a lot to work on in terms of price and in terms of definition and confirmation. So how do you prove that? So if we address these two issues, the markets will grow really in an explosive way because there's been a meteoric rise in cyber events. That's it. Thank you, Vadim. So what's the perspective of the regulator? Herman, the more financial services there are in the digital world, the more threats there could be. People are concerned not about cashbacks. People are more concerned about disruptions at a particular bank. Will you regulate it, or will you hand it over to the insurance market? We will, definitely. I'll respond to a more sensitive issue. We will use pro rata regulation as a sort of proportionate one. Well, the level of digitalization is different with the top 100 banks, with the top 10 banks. Yes, we will use varied or measured regulation. For every credit and non-credit institutions, we'll identify the processes that would need to meet certain security criteria. We'll identify KPIs, and so we will keep track of them. And it's not, we will distribute institutions into credit, non-credit, and credit into 4 types: basic license, non-banking, usual universal banks, and systemically important. Everyone will have their own KPIs. Here's one figure. The time of delay in money transactions is 2 hours for systemically important, and for basic banks, it's for basic license banks, it's 4 hours. So 2 hours and 4 hours. As you can see, different criteria. I also mentioned some of the standards. There will be 3 levels of defense: minimum standard and enhanced. They also account for the size, the share of that institution. So these are quite, straightforward indicators that we rely on. However, our customers need to get high-quality services 24/7, and they need to have minimum risks, regardless of whether it's a VIP client or it's an ordinary client. You need to provide safe mobile apps, identification protocols, digital signature, etc. So any potential digital technology that individuals might face in their work and life. And again, we all realize, and Vadim has confirmed, that such security requirements are must-haves. It's a world trend. It's not just a whim by the regulator, and David mentioned that too. So definitely the operational resilience risk will be always out there. The more services you provide in a remote way, the higher the number of risks, and you cannot get rid of it altogether. You can only mitigate it or minimize it. This is why we very much hope that financial institutions will take it into account as part of their resilience requirements. So apart from financial losses for the client and the organization, you might have more consequences like contagion risks. Other ecosystem partners could get the contagion, so outsourcing companies, vendors, and they would continue infecting everyone, and that domino effect could lead to unprecedented circumstances, even for the banking industry in general, in the most nightmare scenario. We also hope that on their side, the companies would take it into account. I don't feel we need to apply some extraordinary approach. What we need on the bank side, identify, respond, and quickly recover. That's it. Very simple. These are our principles. Now, on insurance. Since the beginning of this year, there's been a kaleidoscope of statistics. Credit institutions say it's billions of losses. The Interior Ministry says hundreds of billions. The prosecutor's office gives their figures. According to our data, it's about 10 billion. That's what is reported to us by the credit institutions in their reports. So we can prove our calculations. I don't know what others and where others take their figures. There's a lot of work outstanding. The person was robbed, and they lost the bank card, and the robbers got the money from the bank card, and the Interior Ministry qualifies this not as robbery but as cyber threats. Well, you know, bank card is usually a high-tech product. Well, insurance is all about math, actual calculations, long time series, and as Irina said, there's more quality series in the West. We also get this data. We do a lot of data mining. We need to clean the data, now need to make them anonymous, and then share it with our colleagues. Without the long time series, we won't be able to do what Vadim said. Otherwise, it's going to be just, you know, a really haphazard attempt. But regulation will be important. We'll try to help, and we definitely want the industry to move towards insurance and towards better protection. We've got some comments. First question is to Irina. How popular is cyber insurance, particularly after the pandemic? What companies get insurance against these risks? Well, the pandemic has been a driver for the insurance against cyber threats. A lot of people and companies went in telemode work, and the financial sector is ahead of the curve. And it's first the banks that, it's primarily the banks that get insurance against cyber threats, pharmaceuticals, retail chains, and other chains that like e-commerce chains. So if you have a lot of IT operations, you need that. And demand is growing. I agree that the Russian market is just a drop in the ocean. 500 million rubles, that's the size of the market. Vadim gave us the total size of the world market, but the Russian market is more modest. So we do see demand, but so far it's just more about interest. Not many people buy insurance plans. So it's just the biggest fish that buy insurance. Vadim, a question to you. So you've got a disruption in your app. Who do we turn to? That's a question from the audience. Okay. If there's disruption, there are two channels of communication, call center or the bank's branch. Just go to the office. So here's what I would recommend. I don't know that social engineering is the curse of today's world. There are a lot of scamsters here in Russia. I guess that's a problem for other countries too. Definitely, it's preferable to go to the branch, to contact your manager, to go physically to that office. If there are some suspicious transactions, you contact the call center and block. So I suggest you use official channels, the channels with maximum safety, so that you know for sure that's a bank. And don't believe anyone who would call you back and say they are from the call center of the bank. Security of the bank, call center of the bank, the Interior Ministry, the operations center, the calculations and the settlement center. If these individuals call you, don't believe them. You need to make a call. You need to make a call, not receive a call. You need to type in the number number that you can find on the official site. That's the only option. Herman, a question to you. Does the central bank believe that that insurance against cyber threats should be mandatory, shall be mandatory? Well, it seems to be tempting, but we're not ready for this. We're happy to see more work done in this area, but we need more data. Without data, you cannot move forward. Insurance pact is consensus. The banks need to be aware of the pros, where they can save on it, and insurers need to know what's the target and where they earn on it. And as Vadim said, this is commercial activities and profit-making activities, and it's not charity. Every party wants to save something and earn something. So I'm sure it will become profitable going forward. We will work on it in a civilized way to solve these issues. Insurance companies do have the data, they have these time series, and we now have a pilot project. An insurance company and several banks with a basic license are discussing a package solution, so that not every bank would have to buy, but it's going to cover all these banks. So that's the pilot project we're running right now. Let's go back to the our poll. Here's what our audience says. Could you please bring it up? Not yet. Nadezhda, can I use this time to comment on what my colleagues said, particularly Herman? Okay, finally, we've got the data. Yes, Irina, I'll give you the floor in a second. Currently, at the moment, 58% of the audience believe this is the key threat for an institution, and only 37% believe this has the same weight as other risks. I think that very much speaks to the importance of this agenda. Yes, on mandatory insurance. We as an insurance company fully support the regulator on this score. If there is a service that is imposed, that is forced upon the market participants, nothing good will come out of it. Clients would have a stereotype that it's something redundant, they don't need it, they'll try to, keep the price as low as possible, or, there could be moral hazard. They would think that everything is insured and they will just sit quietly, don't monitor the risks. And going back to what Vadim said on the rates, if the official mandatory rates were calculated in a bad way, in an incorrect way, then insurance companies will not do that because they will not earn money, otherwise or it could be too expensive and the customers would try to evade this practice. So I fully agree with Herman. So I hope they won't make it mandatory. It could just be an option to reduce the regulatory pressure, the regulatory burden. So if you have the cyber threat insurance, maybe with a particular company, then investors might look at some of the companies with more active interest. So what are the indicators that the bank and the client can use to see how the bank ensures its operational resilience? So what are the KPIs that you can identify? Question to David. What about international practice?
I think that's an excellent question. And coming back to some of the challenges with respect to cyber insurance, one is I think the difficulty in being able to assess policyholder vulnerabilities. I would invite you, there's been some stock taking done by the IAIS on this very recently about the challenges But coming back to maybe I'll answer something different, not specifically KPIs, because this is an area of a pretty intense debate among the central bank community. But I think coming back to what Herman had said, when we've done a pilot program with a number of central banks trying to assess their cyber resilience, and I must stress that whether it's a proprietary or more of an international standard, those central banks that apply a security framework and also have a fairly robust 3 lines of defense tend to be the ones that come out very well when we do a cyber resilience assessment. So I think it comes back to picking a specific cybersecurity framework. They're all a variation on a theme. Making sure you institute those properly, take a look at the practices around that, and then I think with a fairly robust 3 lines of defense, these are typically the institutions we see that fare very much more favorably when it comes to an overall assessment of their cyber resilience, which I stress is just one component of operational resilience.
Спасибо, Дэвид. Ну, подводя итог,
Thank you, David.
сказать, что, конечно, рынок очень сильно...
Well, as a wrap-up, I could say that the market's growing steadily. It's great that Russia has been using digital services and they are really well developed. We just need clear, straightforward rules, and regulation could lower the risks on the client side and provide a level playing field and transparent rules for all the market participants, and that would protect the interests of the companies and individuals. Well, we're working on it. Could you just give me a second? Well, the results of the poll have been positive. We've managed to convince the audience that it's really relevant. At least 58% share this understanding with us, and it means that we've been quite convincing. That's a pleasure. Thank you. Thank you for taking part in this session. Thank you.
Добрый день, уважаемые коллеги.
Good afternoon, dear colleagues. Good afternoon, dear friends. Our today's session is about a new topic, which in turn has many aspects of challenges and trends in technologies in itself. And it is called New Opportunities for Market Participants and Regulators, RegTech and SupTech. But in addition to RegTech and SupTech, we're going to discuss other challenges as seen by the regulators and by the market participants in terms of new regulatory trends and supervision practices. The panelists today would be Ilya Polikov, Chairman of the Management Board of Rosbank, Dmitry Zauers, Board Deputy Chairman of Gazprom Bank, and Andrew McCormack, Head of Singapore Innovation Hub of BIS, and Sergio Karim, a partner with EY. First of all, I would like to say that we need to be reminded ourselves what RegTech and SupTech are, because we are using those terms, but in terms of the definitions, we need to really make sure that we have the same definition of those. SupTech are technologies used by the regulator to improve the efficiency of monitoring and supervision over the activities of market players in its immediate operations. So RegTech are basically technologies used by the market players to effectively comply with the regulatory and supervisory requirements of the regulator. I should say here that the technologies in these areas, RegTech and SupTech, are developing quite quickly. Before coming here, I checked some recent information about those, and in 2020, despite the fact that it was the year of the pandemic and some things were slowed down, the total investment into RegTech was $10.6 billion. In 2018, it was 6.5 only. And 30 regulators already have some approved SupTech strategy, and they are working to improve those with the market players. RegTech solution, something that is done mostly by the market players. There we identify 5 areas of priority where, in accordance with international surveys, market players can see the most benefit from such technologies: AML, CFT, cybersecurity, fraud prevention, reporting, and creditworthiness assessment. So international statistics here should be of interest to us because we already have a number of participants who would introduce us to international experience. We would be happy to check our positions with them. The Bank of Russia is very active in RegTech and SupTech and has been doing that since 2017. In 2018, we had a broad discussion of our consultative report on the subject. I should say that we have lived a long way and path with the market players. First, from understanding why we need that at all, to a clear understanding that we really need RegTech and SupTech. And to us, at some point, it was difficult to establish some priorities in those initiatives because there were too many of those to process. And this relates both to the regulators and supervision. And my question is to Ilya Polikov, who's double-hatted sort of. Rosbank is a part of Société Générale, and Rosbank, together with a parent company, takes many innovations, including in RegTech, but also Rosbank, as the Russian player, has a lot of experience in the technologies that are applied by the bank independently. Ilya, how do you proceed in terms of technologies to meet and comply with the requirements of the regulator? And where do you draw from the experience of your parent company, Société Générale, which is represented in many geographies? And where do you see the unique Russian experience that you can effectively apply in Rosbank? Olga, hello. I welcome all of you. First of all, thank you for inviting us to this panel. Indeed, the world has changed, and we are all together, but we are sitting in different locations, countries, countries and cities, but we are still part of this IFC, International Financial Congress, which is traditionally organized by the Bank of Russia. Answering your question, indeed, you were right in saying that Société Générale is an international group represented in more than 60 countries, and hence Société Générale reports to the European Central Bank, to the Bank of Russia, and to many other regulators in the countries of our presence. And of course, it creates a lot of complexity and the requirements of the many regulators that we have to meet. Inside Société Générale, we are thinking, not only thinking, but implementing some solutions that can meet the requirements of most regulators, and we're trying to use the synergy within our group for that. These are the RegTech technologies that we use mostly in compliance and risk management. And here, at the level of the group, we have a number of solutions that can be scaled up and transplanted into other countries, including into Russia, which will help us use this scale-up effect to be effective. We have an internal startup which is called Omios. It is about RegTech, and that startup was established as a result of some internal incubation of our efforts, and that startup now is offering services not only internally but also for the outside users. Omios is actually analyzing the reports of the entities and extracts the information from PDF files about the name of the company and checks that name against our databases. And that makes it possible for us to prepare some answers to the requests of the regulators in a much faster way. And this is, I'm talking about compliance now. So this is an example of an internal startup which helps us to comply with all the requirements, and this is an example of our development in RegTech. In addition to such solutions, we also have a practice of conducting quite complex, large-scale stress tests for, say, cybersecurity, where Russia is also one of the key players of that initiative. By the way, not only do we get some good experience and expertise from such an effort, but we are also trying to contribute in terms of RegTech to the group. And Russia, inside Société Générale, is one of the leading innovative entities there, so that we can happily share our experience with the other countries. By the way, what does this group of yours is using in terms of the Russian expertise and experience in other countries? Well, for example, we have very advanced projects in cybersecurity. This is not only about this new startup of Omios, but other solutions that were recognized as best practices not only in Russia but for the group as a whole, and such innovations are used in France and in other countries where we are present both in retail and corporate banking. Andrew, my question is to you. In 2019, the Singapore hub was opened by BIS, which you actually had. And including the Singapore hub is responsible for the development of RegTech and SupTech. In 2020, the Hackathon Tech Sprint was launched to find new technological solutions for central banks. I would say you are very ambitious in terms of trying to cope up with such a big project, but what challenges do you see, and what are you planning to do within the next 2 or 3 years in terms of RegTech and SupTech in Singapore?
Sure. I hope you can hear me okay. So, I mean, what we're seeing in terms of key trends for regulators and supervisors is that they're now more focused on implementing true digital strategies, and we are, obviously supportive of tech sprints and things of that nature. But we're also really more focused on helping our community move beyond that and really implement kind of, deep data transformation projects, not just within, the regulators and supervisors, but also, helping connect the dots through to industry as well. So what we're doing in Singapore, and I guess to maybe talk for a brief second about the Innovation Hub's mandate, which is to develop public goods in the technology space geared towards improving the functioning of the global financial system. We do that in practice by identifying collective problem statements, pain points for both regulators and financial institutions, and then working through design thinking processes to help develop innovative solutions that might address these kind of ecosystem pain points. And one that consistently comes up for us is regulatory reporting, right? And banks often complain about the burden and costs associated with legacy compliance reporting, and regulators on the other side say they can't be 100% effective using only aggregated, quarterly type report templated data. So the flagship project that we have now in flight is called Project Ellipse, and that project really aims to address these issues around, and by demonstrating how an integrated reporting platform for supervisors could extract, query, and analyze large and diverse sources of structured and unstructured data in near real time, and that are both relevant to current and real events. For the first phase of this project, we acknowledge that we need to also talk about structured and granular reporting data models. And so what we did was work with the Bank of England, the Monetary Authority of Singapore, and the International Swaps and Derivatives Association to extend their common domain model towards new use cases. And the one we selected for the purposes of our POC was mortgage reporting use cases. So we took reporting templates from different jurisdictions, leveraged this common domain model, and extended it so that reports could be then regenerated based on this domain model. Ultimately, that vision would allow banks to reduce that compliance burden towards templated reporting by allowing regulators and supervisors to access more granular, more frequent data, and essentially being able to recreate data elements that are common in these reports. For global banks, there'd be tremendous benefit in these kinds of use cases where you could standardize potentially across different jurisdictions. So that's kind of the vision that we wanted to project and work on through this Project Ellipse. In the second phase of that project, we're going to be talking about how to enrich that data, how we could take kind of advanced analytics and enrich this structured mortgage data with big data sources such as news, macroeconomic indicators, and property sales data, by way of example. And then, again, bring this back to the Basel community, the FSB, interested global banks and regulators to share in an open source way all of this work back to the community. And hopefully that helps kind of move this conversation forward out of eventually POCs and into true data transformation. So that's kind of what we're focused on right now.
Thank you, Andrew. My question, I think you raised the right and most relevant topic in the international financial community, and this is about reporting. Indeed, this is a challenge to any country, because absolutely all banks are claiming that there is too much of reporting. It is very burdensome with many associated costs. But in your international experience, do you think we can introduce any standards for specific transactions, standards for banks that might be universal in different jurisdictions? For example, Société Générale and Rosbank, they have similar and the same transaction reporting, both internationally and in Russia. So do you think this is possible universally? And regarding your project, indeed, this is a very ambitious project. I read about it. So did you consider, when you were launching the project, that you should probably only simply collect some data from financial institutions, and then the regulators will have to analyze such data without actually asking for any additional reports from the financial institutions?
Yeah, I mean, I acknowledge that certainly standards are difficult, and international standards are even more so. But what this project that I've described actually does accomplishes at least that in part. So what we did when we look at the mortgage reporting universe in these two very different countries, Singapore and the UK, we were actually able to distill down to about 30 data elements that were quite literally the same in each country. We were able to then find common agreement on the definition of those elements, what they would mean in context of a reporting requirement, and then be able to use those more granular data to generate a more traditional reporting return. So the aim of our project is indeed to show that it is possible, notwithstanding the fact that there are many, many complexities, understanding that the technology landscape and environment of the financial institutions is complex, especially large global financial institutions, that many of them are still actively working on data transformation, master data management type projects that are many, many years in the making and complex. But we actually think that this kind of vision can help catalyze that discussion, show that it is possible to have kind of very specific, well-defined data elements that are indeed common across multiple jurisdictions, call them standards, and then be able to have regulators, call out for those elements, as opposed to asking for an aggregate type summary report. You could say, I just want to have these snapshot elements based on these 30 elements, and then the regulator or supervisor could actually, essentially answer their own questions and query that data set in a way that would, allow them to be a little bit more effective even in their own roles. So we do believe it's possible, but we certainly do acknowledge that this is a very complex problem, probably in the realm of as complex as climate change or something, really big. These are legacy ecosystem problems, and certainly we're not ignorant to the challenges we face. But over the next 10 and 15 years, we have to solve this, and this industry, both sides, have to become more data savvy, more data mature, in order to be more agile and more effective.
Thank you. Question to Seija. In EY, you are busy with RegTech, or more or less you are dealing with RegTech. In 2019, you cooperated with the Cambridge Center for RegTech, and you produced a report. According to that report, 84% of those polled vendors who are providing RegTech solutions said that the high efficiency of the process was the key factor, but saving or reducing costs was a factor which was mentioned by only 52% of the respondents. I wonder, the solutions that are provided by the vendors to marketplace, do you think it should be kind of like bifurcated, both to save costs and to reduce costs and to improve the efficiency, or do you think something is of priority and above the other?
Thank you very much, first of all, for inviting me and EY to your session today. It's great to be here, and it's great to be here with the other panelists as well. And thank you also for the question. I think this whole debate around what is the purpose of RegTech and what's the value of RegTech, and whether you should go for an in-house developed solution like Ilya described, or whether you should go for a vendor, has been a debate that we've been working through with the industry and regulators and others since we've been working on RegTech, and me personally, I've been in this space for several years now. So just to give everybody a little bit of context, one of the things we do is help our clients think through some of the technologies that are out there and which might be suitable for their needs. But also I help internally EY think through whether we need to build a solution and whether we are better off building the solution or going to a vendor ourselves. I think the reason and the purpose for developing RegTech solutions, whether you do that in-house or externally, is absolutely, as you say. So there are sometimes cost efficiencies, and I think more often than not, those cost efficiencies are actually very difficult to, one, predict accurately, but two, then measure well as you implement that RegTech to really show that a cost efficiency has manifested. We see cost efficiencies very often, I guess, interpreted in the sense of this is how many people we needed originally and this is how many people we have now. I think far more we see, I guess, not just greater metric measurement, but greater organizational, I guess, celebration when it comes to process efficiency, because actually people are able to spend more time on analysis rather than process. There's greater job satisfaction. There's greater identification of issues rather than problems. So issues that need to be solved around the business as opposed to problems in the process. So I think RegTech still has the, I guess, the scope to prove itself in the cost efficiency space and the process efficiency space. And there are many, many capabilities which are allowing organizations to do that. There is a big question around whether you should build in-house or whether you should go to a vendor. And there's been some really interesting research done in this space over the years. And most recently, we've seen the UK regulator issue some articles about why one organisation might go to a vendor and another might produce a solution in-house. And interestingly, the main reasons to determine which route to go through seem to be around a need for RegTech vendors to better communicate their offering, so the organisation can really understand how it fits with their purpose and their objectives and the activities that they're doing. But also a need for some of the larger organisations in particular to ensure that their procurement processes enable some of the smaller RegTech providers to be able to come into that organisation and really flourish. And of course, and I think both Andrew and Ilya have referenced these points as well, but there's the integratability. So how integrated will that vendor be with the existing systems, and not only the systems, but also the processes, the controls, the operating frameworks that exist. What we've also seen as a developing, I guess, mood is that many organizations would very much like for some of the RegTech vendors to be certified as good. And that whole debate around certification and who could provide a certification and what a certification could look like and should look like, I think is one that will continue to be debated for another, for the future, I guess, and hopefully will land in the next year or so.
Thank you, Sajda. And indeed, in the light of your comments that you need to really decide whether you should take off-the-shelf solutions or you probably can opt in favor of your in-house solutions. There, I actually would like to ask Dmitry. Indeed, the European market, in terms of RegTech solutions, is more saturated, if you like, and more mature in terms of the availability of ready-made solutions. I took part in many of the conferences where the vendors of RegTech solutions were presenting their products to the clients. In Russia, we have a different story. Banks try to do it in-house. As Ilya said, that it is cheaper and faster to do it in-house, and then probably it can be offered for the group to be used elsewhere in the other geographies. Dmitry, what is your way in terms of the RegTech solutions that you are using? And my second question is about our roadmap. Indeed, it is a very large one, 11 streams and 42 programs, but you cannot take them all at the same time. You need to have some priority. So what would be the top 3 RegTech projects that you would choose? What are those? But first, please, my first question.
Thank you. Hi, everyone. Thank you for this invitation. First, I'll respond to the second question, because the first will be linked to the second one. So 42 areas, indeed, they're all-encompassing. They cover quite a lot of streams and would help improve the efficacy of regulation and supervision in general. I represent a credit institution, and my favorite project is the optimization of the amount of data to be submitted and shared by the credit institutions. So again, we're talking about decreasing the regulatory burden, compliance burden. So there are 2 major areas. I'm a fan of data-centric models, data-centric approach. That's the way forward. That's the window shopper of data, single data format, single requirements for how models are designed and integrated. That's the must-have. That's our foundation to improve efficiency going forward. And second level is risk management and IRB approach. We are surrounded by the oceans of data today, and we need to switch from professional judgment model concerning a specific transaction to professional judgment vis-à-vis a model. One person cannot assess such complex deals that we're seeing today. So this IRB approach can help us achieve the so-called network effect. The central bank and other firms will be able to model different situations that you cannot just model on the basis of one bank. Concentration of risks, for example, spillover effects of a certain risk compared to one counterparty or a group of related counterparties or a group of unrelated counterparties. So we can only assess this if we have the data-centric regulation model, if we have the single shared requirements of how other companies can access this model and use it. Going back to your first question, luckily we do have competition among banks, and there have been a lot of solutions, in-house solutions concerning risks. And if you look at the retail banking, modeling inside the banks goes far beyond the regulators' requirements, up and above those requirements. Here's the case study, interpretability of a model. We all know that neural networks or some boostings, they can give you a better result, but they are not interpreted, these models. And this is why the regulator would force us to try to interpret these models. So you would be forced, later on, sooner or later, to use models that would be interpretable. I have a question to Ilya. RegTech solutions, should they be unified or customized to a specific organization's needs? Some part needs to be universal, and some parts needs to be tailor-made. The beauty of the digital world is you get maximum results if you invent the best product. Ilya, should there be a balance between in-house solutions and off-the-shelf solutions that you can buy from the vendor? That's exactly my answer. So we use a lot of in-house solutions, But I'd like to reiterate that we also use off-the-shelf solutions, so there's a kind of a balance, equilibrium, and standardization will help us to roll out off-the-shelf products for a bigger number of players. So a hybrid solution, a mixed one. What about our foreign participants? What's your vision, given your vast experience? Different regulators have different technology level. Talking of SupTech, that what regulators apply in their operations, what kind of policy should regulators pursue as they introduce SupTech decision solutions? Andrew.
Yeah, well, thank you for the question. I think maybe I would refer to the FSB report on the adoption of RegTech and SupTech, which found that certainly SupTech is a strategic priority for an increasing number of authorities. The majority of the respondents to the survey did indicate that they had SupTech and innovation and data strategy elements in place. And a growing number of them since 2016 have been starting to implement. So that's the good news. The most common use cases, as we've discussed, were around regulatory reporting and indeed data management. Artificial intelligence, of course, is a key area of interest, both in terms of how it's used at regulated entities, but also how it could potentially be deployed as a SupTech tool, for example, within a supervisor. But again, that depends on having kind of a baseline of data maturity and data capability within the supervisory environment. And the report also does highlight that there's an extremely long way to go. So while these initiatives are very positive in nature and indicate progress, the vast majority of regulators and supervisors are essentially still working in Excel, essentially still consuming the static reports through, SFTP drops or secure portals. And these are just fundamentally legacy processes. And so the ability to ingest data, the ability to query data, the ability to kind of set out that strategy in a collaborative forum with industry is absolutely critical. And I think we're going to see more and more jurisdictions going in that direction. I mean, obviously Austria many years ago took that step with the ALREP model, and I think that's one potential path, but I think there's other ways as well, and exactly how it gets implemented is actually somewhat irrelevant. It's more just having the direct engagement between the industry, between the regulators and supervisors to kind of carve that path, the leadership to show the way is just fundamentally critical in making this journey. So from a BIS Innovation Hub perspective, we're really focused on how can we help catalyze that cultural transformation, that upskilling within our within our community of central banks, and what are the elements that we can do to support our stakeholders in potentially actively testing and experimenting with different technologies, different vendors, different solutions, but ultimately helping solve those common pain points and move those organizations through the cultural transformation in order to make some of those key technology decisions around how to get to a more integrated regulatory reporting environment or SupTech use of more advanced SupTech tools. So I'll leave it there.
Andrew, скажите, пожалуйста,
Now, Andrew, what are the mistakes that you would warn regulators? What we should avoid, what we shouldn't do, definitely, as we implement SupTechs?
Well, yeah, that's a great question. I think treating them as almost, innovation theater experiments that are not, deeply connected to a fundamental transformation program, I think is a mistake. I think, it's nice and well to say that we're working on, AI tooling or what have you, but if it's not done in a kind of more meaningful way with the actual, end users and supervisors and analysts who have actually a lot of great ideas and inputs. So really incorporating it into a more fundamental transformation strategy, I think, is critical, and to not do that is a mistake. Obviously, it's a competitive world for talent, and I appreciate that Russia's special in that there's a tremendous amount of technology talent, but certainly in many other jurisdictions, engineering talent, data science talent is in short supply. And so not having an HR strategy around how to recruit and retain, those types of staff, right? There has to be some internal capabilities in order to lead these strategies and become more proficient and kind of digitally native. And so, finding a way to compete for talent in your local marketplace is tremendously important. So those are two ideas that come to mind.
Спасибо.
Thank you.
Будьте добры, тоже скажите свое мнение с точки зрения вашей...
And Serge, what about your perspective from EY? What is the perspective of EY on SupTech? What kind of advice would you give to the regulators for the next 3 years?
Thank you very much for the question. I think I'm going to start in the same way that Andrew did and say that, when you look at regulators, and we've worked with several across the globe, helping them develop their data strategies and digital strategies. And I think it's absolutely right to say that, like many organizations that we work with, that they are still kind of evolving their capability and their ability. So yes, you still see lots of Excel spreadsheets, and yes, the kind of need to upskill is still absolutely, something that needs to be recognized and dealt with. That said, I think what has worked really very well is when a regulator has acted as almost the kind of the person within the ecosystem who brings together the various players in the ecosystem, and whether that is through convening tech sprints or whether it's through sandboxes, which I think have worked really well across various jurisdictions, or whether it's about having platforms, and the UK regulator here is just now testing out its digital sandbox, where it allows vendors to use synthetic data so people can see actually how a solution works. I think those types of tangible kind of accelerators of innovation and bringing together of the ecosystem are things that the regulator can do very well in the SupTech world. And in the RegTech world. I think we've spoken a lot about kind of regulatory reporting, so the numbers game and the stress tests and the models, and there is absolutely lots of potential there for, more coded language, more common language, as your other speakers alluded to as well. I think where this becomes more difficult is when you have more subjective regulation, and there are multiple regulators who have what we call conduct or cultural regulation. And when you're trying to interpret that into a universe or a dictionary which is codable, that becomes far more difficult because there is so much more interpretation required in those regulations. That said, we do see various regulators looking into digital regulatory reporting. So where a requirement is more common and more binary, turning that into, language that can be read by a machine and then can be executed by another machine within an organization is certainly something that we see regulators moving towards. And I think that's absolutely right to test those concepts, although I do think they have some way to go. I think some of the other areas which have been useful developments have been things like the Global Financial Innovation Network, which is a forum to bring various regulators across the globe together to discuss innovation, to discuss cross-border issues, to think about the policies that might need to be broader than their own jurisdictions can accommodate. And I think if I were advising regulators around where they need to think forward, one of the developments we see is the whole piece around data and data ethics. So what is ethical use of data? When is it okay to have bias within some of your models? And we see across the globe, again, many regulators developing principles in this area. So principles around data ethics and principles around the regulation of artificial intelligence. I think there should be focus on that, and I think there should be faster focus on that by regulators. Because when I talk to my clients in industry and we look at how quickly they are developing and how quickly their strategies are developing in this space, my sense would be that this may be an area where regulators are slightly behind the curve. I wouldn't say that across the piece, but we certainly do see that. So my advice would be to back to the skill set, back to kind of how you organize your own organization as a regulator, and back to your policy development. I think AI, data and data ethics is an area where clearer regulation needs to be thought about more quickly.
Thank you very much for these insights. So you've raised very important ideas, and they really echo what we think as a regulator. Andrew mentioned some of them too. So remember how many times we all recalled the word data. So we talk about RegTech, SupTech, but we come back to data, because the data on the side of the regulator, on the side of the industry participants, becoming the greatest value, the ultimate value, and our ability to process the data, to protect the data, will define the future of the financial industry and our entire country. And I fully subscribe to what you said, to the priorities you identified. So in terms of priorities, we are the same across geographies. So first, everything related to reporting, data and risks. In terms of technology, the regulator needs to upskill its staff in terms of AI, data processing, ML. And Andrew was right. Upskilling our staff and the fight for talents. So you have data on the one hand, but on the other hand, where do we find and train, adapt our staff, both on the regulator side and on the industry side, to make sure that these data can be mined and processed in a professional way. We, as the Central Bank of Russia, have been doing a lot in terms of data. We have ambitious plans. We'd like to bring down regulatory reporting burden for our industry, and we'd like to provide some collective solutions for us, for other central banks, and for market participants. And Sage also said that regulators are now moving to a new paradigm. So they need to think of themselves as a member of the ecosystem. So we now live in a world where ecosystem, where there is ecosystem and the regulator is a member of that ecosystem and not the orchestrator of that ecosystem. Every one of us plays their own role. We need to be able to live side by side, to coexist in harmony. And we would like to set up a universal KYC platform, and that applies to RegTech and SupTech. And sometimes there are areas where you cannot really distinguish between the two, and you shouldn't. So that will be a platform on our side, because we do have the data, but we'd like to share the data to the market participants so that they could find it straightforward and easy, so that they could see information across their clients and don't waste their own money on setting up their individual in-house infrastructure. I have a question to Dmitry and Ilya. There were a lot of debate on this centralized universal KYC platform. Should we do it, shouldn't do it? What's your take? Are we right as a central bank in saying that this will be an efficient platform for us and the market participants? Or there are some caveats, is there any writing on the wall that we should be concerned about? Ilya, let's start with you. Thank you for raising this important issue. So this KYC platform, It's an exciting platform. It's a positive move both for the regulator and for the market. It could enable the banks to cut their investment costs and to set up a level playing field in the market, to have the same standards. And to be honest, sometimes we could be outcompeted because our requirements in terms of transparency, in terms of identifying beneficiaries, ultimate beneficiaries, our KYC requirements are much tougher than some of the other market players. So we could be outcompeted, you know, we could be beaten. So for us, it's a benefit. It will help to level our competition conditions. So it's a positive step for us. I know there are many caveats. We need to know for sure what the regulation will be, but the devil is in the details. But the idea overall is really good. I think it's going to be a positive step for the market. Dmitry? I agree with Ilya. Any big bank would say that, yes, you know, we need to design our own onboarding, compliance and KYC platforms, and every big bank would have to do it on their own to comply with regulation. But we can only achieve the economy by scale, economy from scale effect, if the regulator steps in. I think it's a positive move, and I fully support it. Well, that's a good example of how we can interact in SupTech and RegTech, and then we can share our experience with our colleagues. As I know, in Singapore, there was an attempt to set up the project like this, but currently, I don't know the status of the program. Maybe Andrew could tell us what's the current status of the KYC project that you launched as a pilot several years ago in Singapore, very briefly.
What I can say is that there's actually quite a sophisticated digital identity service here in Singapore called SingPass, which is based on a centralized repository run by the government, not by the central bank, and that they are adding new capabilities and features to that digital identity service as identity provider to the banks in some cases. So over the past 6 to 12 months, some of the KYC features were turned on such that you can, for example, authenticate at an ATM or for an online banking transaction via the digital identity service using a biometric or a secure multi-factor process. So there actually are some live in-market solutions where essentially the centralized identity provider is the government, and that the banks are consuming that service amongst other private entities as well. So it's quite mature, but it's not run by the central bank.
Well, that's a different project. We are aware of the project. Yes, this is a digital identification, biometric identification program. Well, we've been trying to roll out the same biometric program with the government. This is a digital profile project, and it's really great that Singapore leads by example. It's great that you can have a great project at the level of the government if you do it in a smart way. Colleagues, we just have a couple of minutes left. I'll ask you just one question. You'll have 30 seconds. What's your opinion? What 3 technologies in the next 3 years will be the most relevant in SupTech and RegTech? Ilya, three technologies. Give me the 3 technologies. ML, machine learning, AI, and all solutions related to data protection. Andrew.
You know, I think Ilya nailed it. I think those are definitely the top 3, and I would say not blockchain.
I was happy to be the first to be asked.
I'm unhappy to be the last. I would agree with what Ilya said, what Andrew's echoed. My one add would be we need to have the joining of dots. So you can't just keep on having a solution here and a solution here. We must find a way of having single platforms to join all of these dots together.
Сейджита, потому что вы женщина.
Well, you're a woman. Yeah, we have a holistic approach. It's all about, women are all about harmony. Everything needs to be balanced and integrated. So I really love your approach and I can relate to it. Dmitry, I agree with you, AI, neural networks, data-centric models, the distributed ledger, data management, and cybersecurity. It's one of the key threats that's out there the banks are facing. Thank you. Thank you, distinguished panelists. Our panel is coming to an end. It's been a huge pleasure to say that as I was doing my research before the session, I was a little bit nervous. It's not really a popular topic. It's a quite complex one. Not everyone knows what it's all about, but I think we've done it. We've made it. So in 15 minutes' time, we now know what is RegTech with SupTech. We know where our pros, we know where we are still missing, and in the next 3 years, we now have the same priorities. It's great that we're on the same page.